It's nice to see you here at Post 9. Thanks for coming.
Thanks for having me.
So there is a good debate right now about growth versus value, and I read an awful lot that says value is having its moment and it's not nearly over. Why is that wrong?
You know, when we look at the market, we don't actually look at it value versus growth. What we look at is businesses that can grow despite a weakening economy, especially right now. And sometimes, given the correction that we've seen in the market, sometimes growth actually becomes characteristically what looks like value. And that is what we're starting to see in the market, as a lot of these stocks have baked in a slowing economy to some extent.
You're talking about GARPy stocks, what people call growth at a reasonable price.
Well, I think, yes, we are talking about GARPy stocks. Businesses like Microsoft look GARPy at this point, but there's also businesses like Applied Materials that, you know, even in a recessionary scenario, the earnings trajectory is such that you can buy them for anywhere from 9 to 13%. They generate 9 to 13% of their market cap in cash. So, you know, for us, those become really compelling opportunities, because if you look at the semi-cap equipment players, for example, these are the machines that build all of the innovation in our world. And so for us, that sets us up for a pretty compelling growth phase and opportunity on risk reward.
What if the machines that build the machines aren't building as many of the machines because there's now a supply glut when there was a shortage?
Absolutely. And, you know, and that's why we invest based on probabilities, right? We don't have an exact earnings number, but what you have is, you know, what is the probability or the trajectory of earnings in a recessionary scenario or in a less recessionary or just a slowing growth scenario? And however you look at that, for example, just for Applied Materials, again, it's 9 to 13% free cash flow yields.
Let's talk Microsoft for a second, okay? Because it's an interesting time to pick a stock like that, right?
Yeah.
Big concerns about currency, which the company has said itself is going to hit earnings. You're not concerned about any of that? I mean, you know, again, it was ServiceNow, different business, obviously, but they said to the effect of it's impossible to outrun what's happening with currencies. What about that with Microsoft now?
You know what? I think we have to differentiate between fundamentals and currency effects. And if you look at businesses, the core fundamentals of a business like Microsoft is, I mean, we view it as a democratization of digital transformation. It makes technology accessible to businesses of all sizes. And, you know, that aspect of digital transformation and the use of AI, that is, will it slow? Sure, relative to where it was growing, but it's not going to collapse and it's still going to grow. I mean, in any given year, Microsoft has 85% visibility to the next year's revenue because of the recurring nature of their business today. And so, yes, will it slow? It will. But the question is, what is a stock baking in today? Is it baking in at a 4 and a 5% free cash flow yield? Is it baking in a recession that is deeper?
You feel that that's what 254 suggests to you on the price for Microsoft right here? Is that what it is baking in? Right, so, stock was at 275 or so. It's not like it's down all that much.
Well, it peaked at 320. And so back in November, I do think it was at 320. And along with the rest of software, it has come in. So it is baking in a 4 and 5% free cash flow yield today.